Good morning, everyone. Welcome to another edition of the NuRAN Wireless video presentation. My name is Frank Candido. Today is November 30th, 2022. December quickly approaching. So with me today, just outside of London, I have Jim Bailey, the CFO of NuRAN Wireless. Hi, Jim.
Hi, Frank. Good to see you again.
And in Quebec City, Francis Letourneau, CEO of NuRAN Wireless. Good morning, Francis.
Good morning, Frank.
So I just want to take this opportunity to apologize to a number of the shareholders that have been trying to reach me in the last week and a half. Last week, I was in the UK on business, so that made it very difficult. And in the last couple of days, I was not avoiding your calls or avoiding answering your text messages. But since we were in blackout, given that we just released our quarterly financials, I wanted to avoid any issues of answering questions in advance of that. So I will be back to answering questions, and whether it's email, phone, or text message immediately now that, after we've released these financials, which we've done this morning. So getting into that, I have a number of questions for you guys. These are all questions that we've either discussed in advance or questions that are being asked all the time from shareholders, the ones that I've alluded to just previously. So let's get started. We've announced our Q3 numbers, and we had a big jump in the 9-month revenue of approximately 3.8 million for the 9 months and 1.7 million approximately for Q3. So what is this attributed to, and what is the expectation going forward from quarter to quarter?
Okay, well, there's three elements to our revenue, three main elements that we should talk about. The first is something that we did mention in our release, that we had approximately 900,000 of revenue that was related to the Marshall Islands project. Basically, what we have in that situation is we had 2.3 million of deferred revenue sitting on the balance sheet. And what that is it's revenue that we've invoiced, but we haven't completed all the obligations to recognize it. So over the quarter, we reached a number of milestones, and that allowed us to recognize 900,000 of that revenue. And we're now at 54% completion on that project. There's about 1.4 million of deferred revenue still sitting on the balance sheet, and that will be released over the course of 2023, we expect. And that the milestones that we reached are about delivering the 2G, 3G core network in the Marshall Islands. So that was one part of it. The other and most significant part was NAS revenue, our network as a service. The third part, which doesn't really need to be talked about too much, is traditional equipment sales, but those were a low number. So the network as a service revenue, it takes a bit of explanation because in the Cameroon and DRC contracts, we have a provision that allows for the transfer of assets. So under IFRS 15, because we're doing that, when we take a site live, we recognize the sale of that site. Okay, so we take a portion of the guaranteed minimum revenue, probably about half of it, and that goes into this site transfer. So what you're going to see over time is as sites go live in a quarter, we'll bring that revenue in, and we'll have this sort of choppy revenue as sites are released. Underneath all of that, however, is the variable component, and that is the remainder of this guaranteed minimum revenue and revenue share. And over time, you'll see a gradual increase as sites increase capacity, and as we add sites, that variable revenue is going to continue to grow. So that's what's happening with DRC and Cameroon, and we're right in the build phase of those this year. New sites, new projects that we've signed up, and we've talked about this with the MTN contracts, don't have the transfer of assets element in them. And so what we're agreeing is that we will retain those assets over the long term, continue to service them, etc. So as a result, we don't have this IFRS constraint. And what you will just see with those sites is as they go live, traffic coming from those, revenues coming from those will continue to increase as we add sites. It'll be a much more gradual growth in the revenue. But that was the breakdown of our revenue in this quarter, or sorry, for the 9-month period.
Okay, so just to repeat, Jim, then any new contracts going forward, then the expectation is that we are going to maintain that equipment then, similar to the contracts that were signed post the Orange initial 2 deals. Is that correct?
Yes, that's correct. We will
Okay.
retain the asset and continue to operate those assets for the operators.
So it's quite exciting then, because as more sites go live going forward, then we're going to continue to see this, interesting increase in revenue from quarter to quarter. Albeit some of it will be a bit bumpy, as you suggested, but the point is the trend is pointing in that direction, which is something that we've been excited to see or experience, and we're now starting to see some of it happen before our eyes. So okay, so let's get on to the second question. This is obviously the big one. I get asked this all the time. You were expecting the release of the DFI funds by now. We were expecting this months ago. There's been a delay. What's causing the delay? And is there any risk, given these delays, that it's not going to happen at this stage? Because obviously it makes people nervous.
Yeah. And we're as frustrated as anyone. I wouldn't say we're nervous, but we are frustrated by the delays. We could really put that down to the organizations that we're dealing with, and I don't mean that to point a finger, but what I'm saying is the nature of the organizations. These are developmental finance institutions. They're large, EIB is sponsored by the European Union, so it's a funding arm of the European Union. There's a tremendous number of approvals that have to be obtained before we can get to finally completing the contract. Just to go back in time, we signed mandate letters with the 2 banks in January of this year. We were expecting closure of the finance contracts and such by the middle of the year, let's say. And things didn't happen. One of the things we had to do was set up the Mauritius holding company, for example. That was done in April. One of the banks received their approval in July, which we announced. And I think, we were thinking that might be the schedule for both. However, there were some other steps and so on that had to be followed. And so eventually we got approval by the European Investment Bank in October. We've been in close discussion with them throughout this period. We're sharing information. We're doing the things that we had to do. Some of the things that we had to get lined up. One was our ESG program. That's all about an environmental and social management system that we deploy across Africa. And so it's a company-wide policy that we were to put in place to follow the EIB standards. And those are the things. And so that has taken some time to develop those. We also had to adhere to all the environmental requirements in DRC especially. And again, when it comes to environmental compliance, these things aren't straightforward, but you just have to work through the process. What we did decide with the banks around September timeframe is we said, okay, we've got the approval of one bank, we're close on the other one. So what we did is we retained legal teams for both, for the banks and for us. And don't forget that we've got it's a complex financing in that we've got Canada involved, we've got Mauritius, we've got Cameroon, and we've got DRC. So there's a lot of moving parts. However, we retained lawyers and we said, let's get started on drafting the financing agreements. And so we did that with the idea that after, once the deal is approved by the EIB, we could quickly conclude on that. So we received the financing contract around the beginning of November in the end, okay, as much as we had. Again, it was a complex document, but we've got the document. And so we're now going through the steps to finalize that. And that is about signing the definitive agreement. So we signed the mandate letter back in January, and now we're signing the definitive loan documentation. We expect that to happen before year end, and drawdown of funds under that will follow shortly thereafter. So there's a time period. There's some things that have to happen between signing the contract and actually drawing down the funds, but they will come shortly thereafter.
Yeah.
I don't want to put estimates on it, but that's where we are. And, it's all been very encouraging. We actually met the banks when we were at the AfricaCom conference, and, everything is going smoothly, and they're very excited about the developmental aspect of what we're doing and the results that we're seeing.
Okay, so just to repeat then, at this point, there is little to no concern that you're not going to conclude this deal.
Right.
Right.
No.
So it's just a matter of when, not a matter of if.
Exactly.
And we're getting very, very close now. So,
Yes.
okay, I'm as excited as any shareholder to see this thing concluded so that we can continue, to accelerate those site builds. This question is really directed to Francis. So Francis, this is one that I also get a lot. So, and I think that shareholders, have a right to ask any question they want, but obviously this is one that, they keep asking and suggesting that it's a credibility issue, which I obviously disagree with, but, I can understand from their point of view where they sort of see this. So we have 134 sites live so far.
Yes.
I was part of those videos where, we announced that we were targeting 400 sites. And I know how we came to that number. So I'm not, it seemed like a very, reasonable number, and one that we could surpass, in fact. And then we lowered that target a few months ago to 250 sites. And now, it looks like we're not going to achieve that target either. So, what's the reason for the slowdown? What's the reason for not achieving, either the 250 or the 400 target? And, really, is it a matter of credibility? Is it a matter of that you're choosing numbers out of thin air and there's no logic behind it? Or is it really a matter of, moving parts and, which are sort of out of your control and et cetera? So, this is a question that comes up quite often.
Yeah, thank you for asking the question, Frank. And I will refer back to the question number 2 related to DFI funds. The press release on site build resumption that we did mid-August, that was shooting for 250 sites by end of October and potentially 400 at the end of the year, was based on the fact that we were expecting the DFI EIB's approval early September, documentation running in parallel so we can have everything closed by end of September, receiving fund beginning of October. But due to the massive delay that was coming from this whole legal review, documentation and so on with the 2 DFIs, we've made the decision, management has made the decision to slow down the build in order to preserve our cash position to support the company. And we didn't know at this time how much time it's going to take. As again, Jim was saying, we were expecting everything to be closed by mid-year. We are now end of November, and we are shooting to get this done before year end. But it was taking into account that the money will be in end of September, beginning of October. But due to that, we had to slow down the pace of builds. We ended up at 124. But the cool thing is that if you look at this, there's some positive point as well. We did 18 sites in Cameroon within, I think, 21 days. So you can see that once we turn on the engine, we can go really fast in terms of site deployment. So reaching our targets is not related to inventory or logistics or something like this. We have inventory in countries in Cameroon, DRC, and South Sudan to build over 250 sites. We will need to order some more towers, power, and everything to reach the 400 site target. But bottom line, it's not a matter of our capacity to deliver. It's a matter of keeping or preserving the cash position of the company, which was the decision made at this point.
Okay, in the press release, something that really caught my eye when I saw the draft, and we've discussed since, but I think it warrants comment to the shareholders. You mentioned something about that the 134 sites that are currently live have already exceeded 95% of which have already exceeded Orange's KPIs. I mean, this sounds amazing. And this is obviously a key indicator going forward in terms of new contracts, in terms of financings, all that stuff. I mean, it's got to be one of the top indicators that, someone would look at in terms of doing their due diligence on NuRAN's equipment and site build, et cetera. You want to comment on this?
Part of the contract that we have with Orange and as well as MTN, we need to meet KPIs expectation, site uptime, call setup time, and all of those. We have like 20 KPIs that we need to follow, and in 95% of our sites, over 95% of our site, we're exceeding those KPIs. Just to give you an example, out of 134 sites, there's only 3 that are not performing the way they should, and it's for multiple reasons. We are working on solving the problem, but it's really good that we're reaching this. And back to your point, the investment fund, the DFIs are definitely looking at those KPIs, and we are above threshold on all of them, which is good because it demonstrates the capacity of our team to monitor and to master the process, but also to our technology to meet expectation in terms of coverage, in terms of KPIs and everything. So we have the perfect tool to serve this market, and this is what this 95% show in the press release.
Okay, great. And then further to that, and I guess, Francis, maybe you should answer this question, or Jim. The delays that we've had to date now in terms of getting sites built, is this going to cause an issue? I mean, we've booked over 4,000 sites now under contract, right? And I've not read every single page of those contracts because they're pretty long. But that said, have these delays or can these delays cause any issue with those contracts in terms of default or not meeting site build requirements or any of that sort of stuff? Are the contracts at risk, in other words, including the Orange contracts, but all of the contracts, are any of them at risk because of these delays?
I have been asked this question many times. There's no risk of default of such, especially related to delays in the contract. It's a partnership contract where NuRAN will invest, deploy, own, and monitor those sites for a 10-year period. So and there's a specific clause in the contract that says subject to financing in all of our contracts. So bottom line, there's no risk of default in any contract that we have there. The other thing is that for Orange or for MTN, we are coming with investment and we are deploying a network for them to meet their obligation related to the country coverage imposed by the regulator. So we are a partner, not a supplier. So bottom line, there's no risk of default in any contracts if we are not meeting a certain milestone or projection in terms of site deliveries.
Excellent. Okay, so the next questions, again, these are all questions that come up all the time. So hopefully you have your sleeves rolled up, both Jim and Francis, and ready. Number one, are we planning a short-term equity raise here? Like, is there a need to go to the markets and dilute our share structure in the short term here? Is there a plan?
There's no plan to do short-term private placement that will bring extra dilution at the parent level. at the PubCo level. It has always been the plan. We were doing a video, Frank, if you recall, 1 year ago, we were in Vancouver. The three of us, we were discussing how we plan on financing those rollouts in Africa. We have created Mauritius, a NuRAN Africa holding entity. This Mauritius entity is going to be the borrower for all operation across Africa. We will bring debt and equity at this level, and this is what has been the plan since the beginning. So we do not plan to do any dilutive at the parent level, any dilutive raise. When we talk about equity as well, this is also extremely important. When we talk about equity at the African level, the equity could come in many different ways. Could be shareholder loan, could be junior debt. It's considered equity from a debt player perspective because this is the NuRAN contribution to the debt to equity ratio, part of the covenant imposed by the banks. But the equity, the pure equity will be, I guess, minimal because so far the interest that has been shown by investment fund, most of them are talking about different vehicles to cover this equity piece.
Okay, so which leads into the next question perfectly. I know that, you're in discussions with many parties. I know that, in fact, even at AfricaCom, you met with some of those parties about advancing. I mean, so, we've got this deal now, right, with the DFIs to get Cameroon and DRC done, completed in its entirety. But beyond that, we still need funds for all these other contracts that we have and potentially any more contracts that we may sign into the future. So, have these slowdowns in installs or the slowdown in receiving the money from the DFI, whether it's a slowdown delay or whether, that's just the way it goes, I'm not sure. But have any of this led to a delay or not advancing the discussions with any of these other potential parties?
Jim?
No, the discussions are progressing, and we've been updating our shareholders on that as well. Just to clarify, Frank, this financing, the DFI financing, will fund about 1,092 sites. Okay, the total under contract in DRC and Cameroon is 2,242. So it's going to fund about half. That's what that's intended to do. And as Francis said, we talked about this structure and bringing the equity and the debt into the Mauritius holding level, and which could come in various forms. All of these investors are following us closely as well. They're in a due diligence phase. We're sharing our financial projections. We're sharing some of the KPIs that Francis is talking about. They're as encouraged as ever. It's worth mentioning too that several of these investors just invest in Africa. So this is their focus. This is their risk profile. This is their development sort of mandate. And so all of them understand the challenges and already have operations and investments in all of these markets. And so they all understand what this is all about. For them, it's all about producing the results, getting the KPIs, signing the contracts, showing that there's this, that there's 4,000 growing to 10,000 sites, and that we have a niche in the rural market that we're able to fill, and we've got proven demand from MNOs. I think shifting as well to this model of owning the assets long-term and not transferring is important to them as well. And
absolutely,
it's an important component of valuation because it means an ongoing continuing value. So once the debt players are out of the picture, which is in 7 years, by the way, these are long-term financings. They're very acceptable in that point of view to what the business can afford and generate. But once they're out of the picture, then we have the equity players, and as in some cases they're putting in high yield debt or junior debt, I should say, but it doesn't get repaid before the other lenders are repaid. So they all see that future and the future potential, and all of them have experience in these kinds of these are infrastructure projects.
Mm.
Okay, these are bringing a utility, telecom utility. So they're long-term yield projects, and something that there needs to be patience and it needs to be done the right way. But it's all, in fact, some of our meetings that we had again in Cape Town earlier in the month reignited interest and found new interest from investors that are, encouraged by the news that the debt financing is progressing on the terms that it is, and that they can come in alongside, etc. And we have another phase of debt financing to come. As you mentioned, we need to invest. It's a cost to invest in these businesses, and so we're maintaining that debt equity ratio, but doing it at the African holding level.
Yes, thank you, Jim, for bringing that point. AfricaCom has been extremely good. Most of the meeting we've had there, Frank, were on the financing side. The EIB approval has waken up a lot of people, and now everybody's knocking at our door, even the biggest one. So it's really good what we're showing here, and we used to have 3 people from for the equity point of view. We now have 2 more following AfricaCom. So the growing interest on our project is great, and we will see more of those potential because for building 10,000 sites in Africa or somewhere else, it's going to take over $150 million US total, as some of the bills are going to be self-financed by the operation. But we're seeking to be in a financing mode or fundraising mode for the next 2 years minimum.
Okay, well, you just said 10,000 sites. That rolled off your tongue, which is a target that we've put out in terms of sites under contract. So are you still confident that you're going to have 10,000 sites under contract, that you'll reach that target? Because we're slightly over 4,000 sites, so we're still under halfway there. And we haven't announced a new contract in a couple of months here. So what's your feeling on that? You're still confident you're going to reach that target? Are there discussions without, tipping your hat in terms of, any information that's not in the public domain?
Without being overly confident, we have signed this summer a group framework agreement with MTN to tap into a buffet of 19,000 sites spread in 20 different countries. So far, we have 4 contracts with 4 different countries: Sudan, South Sudan, Namibia, and Ivory Coast, and we're still in this advanced discussion with some more, 3 to mention on the MTN side, and we will be having more. And we also have discussion or close to final discussions with Orange as well, and we have grown up the pipeline during AfricaCom with a few thousand sites more. So we are extremely confident that we will reach its 10,000 site target probably in the next 24 months. We are we're extremely advanced with a lot of discussion there. I know you don't. We don't like to put the targets in there, but it's the 10,000 site target has been established last year in September. We are now at 4,142 sites, so 40% of our targets, and we are extremely confident that we will reach this target pretty soon.
Okay, so Francis, this question is directed to you. So yes, good idea that you drink a little bit of water. And I get this question asked quite a lot. You sold 600,000 shares in a block trade to an institutional investor. And obviously the reason I know that is that, we were involved in making sure that that cross happened in the market. So what is this a sign that you've lost confidence in the business, that you're liquidating your position, that you're trying to get out the back door? Like, why did you sell 600,000 shares?
I've not lost confidence. It's far away from this. I'm overly confident that we will reach our target and that will make this company extremely successful. No, you know that part of my share compensation, there's shares or warrants that are being allocated with milestone achieved. This entire share compensation brought me up to 1.8, 1.9 million shares. With an average price of $1.64. So that means that I need to pay $1.4 million of tax back to the government. And for this, I need to sell shares. It has been obvious, and I've been telling this to a lot of people, and we've disclosed this information already. So 600, I don't like to sell or move away from my share position. I hate this. But look, this is what it needs. We need to pay your remittance, and this is why we're doing this. But no, Frank, absolutely not. I would be buying if I were in a different position.
So, so the good news though is that the buyer on the other end, you weren't selling into the market. The buyer on the other end is a strategic institutional investor. Someone who believes in the business and someone who has bought more shares in the open market since the cross was done and will likely continue to buy more shares in the market as we go forward. So just want to make that clear. So we've answered, listen, the overall tone, I want to just be clear that we weren't trying to have some sort of like down tone here, because in the past our videos were pretty, we were excited, we were pumped, etc. And now all of a sudden, like the tone here seemed a little bit down. And it's only because most of these questions, with the exception likely of the first question or the second question, are questions that we receive often from shareholders. And so we wanted to deal with them one at a time. That way they know that we're listening, that we're paying attention, even if we don't necessarily answer every single email or every single text message, because sometimes we can't, but and a lot of times we can't. But let's be clear. We have a company here. It's a social impact company that can yield tremendous long-term sustainable recurring profit. We're headed in that direction. We've closed a significant financing that, we would have preferred was available sooner than it has been. There have been delays, but there's no risk on that financing as far as we're concerned coming in. In fact, we're expecting it to come in very shortly, which we will continue to accelerate our deployments, which is a key indicator, obviously, on how to value this company. But we did come out with some amazing numbers in terms of, on the sites that are live, in terms of our, exceeding KPIs, 95% of the sites already exceeding the key KPIs established by Orange, which is tremendous. We continue to be in advanced discussions on booking more contracts and heading towards our 10,000 site target. And we expect to, announce more of those contracts as we go forward. Things in general are good. The only thing that, that we are slightly disappointed on is that we thought that we would be at a higher number of live sites right now, but it's only a delay. And, once that cash is in, we're in a position to really accelerate that deployment in a substantive way that should essentially, deal with the major issue, if there is an issue, surrounding this company presently. Now, in terms of the public markets, I don't know what portfolio you have or some of our shareholders have, but I look at my portfolio, and certainly my portfolio has been down significantly in 2022. The capital markets continue to be difficult. Perhaps we're seeing the light at the end of the tunnel as, discussions around interest rates, being sort of close or near the top and possibly starting to come down in 2023 or 2024, like maybe around the corner. So we still do not believe that our market capitalization in any way reflects either the near term or long term potential of this company moving forward. So on that note, I believe that we've addressed most of the questions. Jim, Francis, are there any last sort of last impressions, comments, projections, anything that you want to say to our shareholders as we go into the month of December?
I will start, and I will let Jim go for the last word for this video. Frank, what we have achieved over the last 26 months, starting September 2020, is huge. Take everything that we've signed in terms of contract, 4,142 sites under contract today. The total contracts value is over $700 million US in terms of contract value. Those contracts will last for 10 years. So a delay of a quarter or 2 quarters is not massively impacting the whole business. Yes, today we talk about undervaluation. Let's just focus on what we can achieve. Those 10,000 sites are going to generate over $200 million US of revenue yearly with a 50% EBITDA with the working financial model that we've put together and the reduce or the lean organization that we're putting together. That leads us to have a significant profit forward looking. It's massive what we are building, Frank. So yes, I see disappointment, but on the build side, but definitely we are getting there. The interest from large lenders and institution to invest in the company is there, and you will see us succeeding in the next months and years. So stay tuned. We're just about to make it work. One point to touch, I will be on the road talking to investor. Our objective is to bring a lot of eyeballs to our stock, especially institutional investors, and maybe bringing some research analysts to cover our stock, potentially uplisting. Frank, we're working on the OTCQB listings that we should complete shortly. So there's a lot of things happening in the company, and we will have a huge success. So thank you very much for supporting the company so far. Jim?
Yeah, and I echo what you said, Francis. I think if we look back a year, we talked about some of the the videos that we did and talked about our plans for financing, our plans for signing contracts, our plans for rollout, our plans for what these sites could achieve in terms of traffic and revenue and coverage and bringing connectivity. And we've put ticks in just about all the boxes. Okay. Yes, we're as frustrated as anybody, or impatient, let's say, to get on with the work of continuing to roll out into these new markets and realize the potential of what this business can be, about continuing our R&D and all of those kinds of things. I think even putting out the quarterly set of financials and listing off some of the achievements that we had in the sort of July, August, September period it's gratifying to look back sometimes and say, yeah, look at all of the things that we've achieved. And so, we take solace in the fact that we have achieved these things. The future remains as bright and as valuable, let's say, in terms of shareholder value and growth and revenue as it's always been. And, bringing the MTN relationship, solidifying the Orange relationship, discussing with other operators, as we've said, expanding the investor base of potential investors in Africa, the lender base, all of that is going on, and agreeing, closing, and executing on contracts. So it's as you say, we're addressing some of the people want to know let's deal with the issues. We can't take our eye off the future and the goals and what we're doing to achieve those goals. And coming up to the end of the year, I think ourselves as the management team and our teams, our employees in Canada, in Africa, and elsewhere, we all take great pride in what we have achieved and where we are going with this company. And so again, we need to keep our investors and all our stakeholders aware of what we're doing, and hopefully, and thanks to you, Frank, for doing this, hopefully we're able to do that and shed light and let people know actually what's going on with the company. But we're very, very positive about the direction that we're taking.
Okay, well, thank you both for that. On behalf of Jim Bailey, CFO, coming to you from the UK, Francis Letourneau, CEO, coming to you from Quebec City, and myself, Frank Candido, Investor Relations, coming to you from Montreal. Thank you very much, and we look forward to our next installment of NuRAN update from management. Thanks again, and have a great day.